Bitcoin moves in predictable cycles. Every 4 years, the supply gets cut in half. Every time that happens, the price eventually explodes. Then it crashes, then it bottoms, then it slowly climbs again. We're in 2026. The last halving was in 2024. If history repeats, we're entering the most profitable phase of the cycle. But most people will still lose money because they don't understand where we are and what comes next. This video breaks down the 4-year cycle, where we are right now, and what the pattern says happens from here. Every 210,000 blocks, roughly every 4 years, Bitcoin cuts the mining reward in half. In 2012, miners earned 50% BTC per block. In 2020, it became 12.5 BTC. In 2024, it halved again to 6.25 BTC. The next halving around 2028 will cut it to 3.125 BTC. This continues until all 21 million Bitcoin are mined around the year 2140. The halving reduces the rate new Bitcoin enters circulation, sellers decrease, demand stays constant or increases, price tends to rise. That's the basic supply shock thesis. Bitcoin cycles follow a pattern. Phase 1, the bear market bottom. Prices crash 70% to 85% from the all-time high. Despair. Everyone thinks Bitcoin is dead. This lasts 12 to 18 months. Phase 2, the recovery and halving. Price slowly climbs. The halving happens. Nobody cares at first. This lasts 6 to 12 months post-halving. Phase 3, the bull run. Price explodes. New all-time highs. Mainstream media coverage. Everyone's a genius. This lasts 12 to 18 months post-halving. Phase 4, the crash. Euphoria turns to panic. 70% to 85% drawdown. Cycle repeats. Understanding which phase you're in determines whether you buy, hold, or prepare to take profits. Halving happened in November 2012. Bitcoin was around $12. Price did nothing for months. Then, in 2013, it went from $13 to $260 by April, crashed to $50, recovered to $1,100 by November 2013, then crashed 85% to $150 by January 2015. From halving to peak, $370. The cycle established the pattern. Halving happens, price consolidates, then it explodes roughly a year later. Halving in July 2016. Bitcoin was around $650. It consolidated for months. Started climbing in early 2017, hit $3,000 by June, $5,000 by September. Euphoria peaked at $19,700 in December 2017. Then the crash. 80,000 drawdown to $3,200 by December 2018. From halving to peak, 525 days. Longer cycle than 2013, but same structure. Halving, consolidation, explosion, crash. Halving in May 2020. Bitcoin was around $8,500. COVID crash had just happened. Recovery started immediately. Hit $20,000 by December 2020. Momentum continued through 2021. Peaked at $69,000 in November 2021. Then the crash. 77% drawdown to $15,500 by November 2022. From halving to peak, 546 days. Pattern held again. Each cycle's peak came later, but the structure remained consistent. Halving happened in April 2024. Bitcoin was around $63,000. This was different. Bitcoin was already near all-time highs before the halving. Institutional adoption, ETFs, corporate treasuries, nation-states, changed the dynamics. After the halving, Bitcoin consolidated through mid-2024, then started climbing again in late 2024. As of early 2026, we're in the post-halving recovery phase. If the historical pattern holds, the explosive phase should be starting or approaching. We're roughly 22 months post-halving. Based on previous cycles, this is when the real bull run traditionally starts, or peaks. The 2013 peak was 12 months post-halving. The 2017 peak was 17 months post-halving. The 2021 peak was 18 months post-halving. We're past that window. Does that mean we missed it? Not necessarily. Cycles are lengthening. The next peak could be 24 to 30 months post-halving, or the pattern could be breaking due to institutional adoption smoothing volatility. Nobody knows. But history says the next 6 to 12 months are critical. Each cycle takes longer to peak. 2013, 12 months. 2017, 17 months, 18 months. If the trend continues, 2025 to 2026 could peak around 24 to 30 months post-halving, putting us in mid to late 2026. Why do cycles lengthen? Market maturity, more liquidity. Bigger market cap requires more capital to move. Institutional investors don't chase pumps the way retail does. They accumulate slowly. This extends the timeline. The pattern might hold, but on a stretched time frame. Each cycle's peak returns are smaller. 2013, Bitcoin went from $12 to $1,100. That's 90 times. 2017, $650 to $19,700. That's 30 times. 2021, $8,500 to $69,000. That's 8 times. If the trend continues, this cycle might peak at 3 times to 5 times from the halving price. $63,000 times 4 is $252,000. That's a realistic bull case for this cycle's top. Not the $500,000 or $1 million predictions you see on Twitter. The math of market cap makes those numbers nearly impossible without global adoption we're not close to yet. If we're in the bull phase approaching the top, here's what history says. Price accelerates. Volatility increases. Mainstream media covers Bitcoin positively. Your barber asks if he should buy. Altcoins pump harder than Bitcoin. Everyone feels like a genius. Then it tops. The crash is fast, 30% to 50% in weeks. Then a slow grind down over 6 to 12 months to the cycle bottom, 70% to 85% total drawdown. That bottom becomes the next cycle's bear market low. The pattern is remarkably consistent across 3 cycles. Bitcoin's blockchain data gives clues about cycle position. MV/RV ratio, market value to realized value. When it's above 3%, we're near a top. When it's below 1, we're near a bottom. Stock-to-flow model predicts price based on scarcity. It's been accurate-ish, but is it predictive or descriptive? Debatable. Long-term holder supply. When long-term holders start selling to new investors, that's distribution. When they're accumulating, that's accumulation. Tops happen when distribution is high. Right now, in 2026, you'd need to check these metrics yourself. They're public on sites like Glassnode and Look into Bitcoin. Every cycle people say, this time is different. Usually they're wrong, but eventually they'll be right. What could break the pattern? Institutional adoption smoothing volatility. ETFs and corporate buyers don't panic, sell like retail. This could eliminate the 80% crashes. Global macro conditions. A recession, war, or banking crisis could suppress or amplify the cycle unpredictably. Regulatory crackdowns. Governments banning Bitcoin or exchanges would disrupt any pattern. Bitcoin becoming boring. If it stabilizes as digital gold, the explosive 10 times cycles might be over. It would still appreciate, but more like 20% per year instead of 400% in 18 months. If you believe we're approaching a top in the next 6 to 12 months, here's the strategy. Have a plan to take profits. Not all at once. Gradually. Sell 10% to 20% at predetermined price targets. $100,000, $150,000, $200,000, whatever. Don't try to perfectly time the top. Nobody does. Sell on the way up. You'll leave money on the table. That's fine. You'll also avoid holding through an 80% crash. Ignore euphoria. When everyone's posting gains and calling for $500,000 Bitcoin, that's usually late cycle. Rebalance into stable assets. Cash, bonds, gold. Preserve capital. You'll want dry powder for the next bear market bottom. If you think the top already happened or is imminent and you're late, don't FOMO in. Wait. If the pattern holds, Bitcoin will crash 70% plus from whatever the top is. If it peaks at $200,000, it'll bottom around $40,000 to $60,000 in 2027 to 2028. That's your entry. Yes, you'll watch it go higher first. That's painful. But buying the bear market bottom has historically been the best risk-reward entry in Bitcoin. Be patient. The cycle always comes back around. Trap 1. Buying the top because you can't handle watching it go up without you, then holding through an 80% crash because you believe in Bitcoin when you were actually just late. Trap 2. Selling too early because you're scared. Bitcoin goes from $50,000 to $80,000 and you sell. Then it goes to $150,000 and you feel like an idiot. Trap 3. Trying to time the exact bottom and top. You wait for $30,000 Bitcoin. It bottoms at $40,000. You never buy. Same with tops. The perfect trade doesn't exist. Trap 4. Ignoring the cycle entirely and just holding forever. This works long term, but it means enduring multiple 80% drawdowns. Most people can't psychologically handle that. If cycle timing stresses you out, there's a simpler strategy: dollar cost average regardless of cycle position. Buy the same amount weekly or monthly. You buy high during bulls. You buy low during bears. Over 10 plus years, you average out the volatility. You won't maximize gains, but you won't get wrecked either. This requires zero market timing skill. It just requires discipline to keep buying during bear markets when it feels stupid. It's possible the 2021 top was the cycle top, and we're in a prolonged distribution phase. Bitcoin could chop sideways at $60,000 to $100,000 for years. No explosive pump. No 80% crash. Just range-bound volatility. This would break the 4-year pattern. Is it likely? Probably not. Bitcoin's supply shock economics and adoption trajectory suggest more volatility ahead, but it's possible. Maturity could mean the end of mega cycles. Altcoins follow Bitcoin with a lag. Bitcoin pumps first, then Ethereum, then large-cap alts, then small-cap alts, then garbage coins. By the time your friend is making 50 times on some dog-themed token, Bitcoin has already topped and the cycle is ending. Altcoin euphoria is a late-stage indicator. If you see it, start preparing to take profits across your portfolio. The blow-off top is near. Nobody knows exactly where we are in the cycle. The pattern suggests we're in the late recovery to early bull phase. The explosive move could be starting now. Or it could have already happened and we're topping. Or the pattern is breaking entirely. What we do know, Bitcoin has had 3 clear 4-year cycles. Each followed the same structure. Until the pattern fails, betting on it repeating is the highest probability play. But plan for it breaking too. If you don't own Bitcoin yet, start DCAing now. Don't wait for a crash that might not come for years. Small, consistent buys. If you own Bitcoin, have a profit-taking plan. Set price targets. Stick to them. Don't get greedy. If you're all in, consider rebalancing 10% to 20% into stable assets as insurance. You can always buy back lower if the crash comes. Regardless of position, understand that the next 6 to 18 months will likely be the most volatile period of this cycle. Don't panic sell. Don't FOMO buy. Stick to your plan. Comment where you think we are in the cycle. Early bull, mid bull, late bull, or already topped. I want to see what this audience thinks. Next video, I'm breaking down Bitcoin's role in the global financial system, why countries are starting to hold it, and what that means for you. Subscribe to Unbanked. The old money had a head start. You have the internet.